fixed income treasuries are not getting the bid that you might imagine given the sell-off, the scope of the sell-off we're seeing in equities. Why do you think there's that asymmetry?
I think one big question is, what's China going to do? China holds over 1.1 trillion of treasuries. We're clearly picking a fight with China. If they decide they're going to go on a buyer strike or worse, indicate they might sell, I think that's part of the reason treasuries aren't quite rallying the way you would normally expect them.
But even before, I mean, back in February, that was sort of the defining characteristic of that sell-off. And you've written a lot about risk parity or risk parity light portfolios, which is sort of like buy a little bit of everything. It's just not working that great.
That is correct. I've kind of talked about risk parity light as anything that you own equities and then you own long-dated bonds as a hedge against that. And that worked phenomenally well. Last year was a phenomenal year. It's, had almost no volatility, had very strong returns. It's not working well this year, and I think that's starting to force some unwinds. As volatility increases, that strategy gets a little bit more tenuous. And so that's why we're getting these days where you get, they're both moving down in the same direction as the worst problem. And that's been happening a little bit.
What's the distinction of this round of selling? What sets it apart from what we saw earlier in February? I mean, after the fact, we knew that the volatility ETFs, the low vol ETFs, were contributing to the sense of panic. But we're not seeing that same dynamic play out this time around.
Right. That's why I'm actually more concerned right now, is that back then we kind of were all over what was going on with the VIX ETFs. We saw that as a potential threat. That worked out. But everyone, including myself, was fine with the fundamentals, right? Mm-hmm. We had just had the tax cuts or tax reform, however you want to call them. Everyone was really comfortable the fundamentals were good. Now all of a sudden you've got these tax issues. You've got some tech companies that are having a little bit of trouble. The case for fundamentals being strong is a little bit less so this time around. And from a technical standpoint, this would be the third time we touch this 200-day moving average on the futures. If that happens again, I think we fall through right now.
And of course in the cash market too, I'm looking at the S&P 500 right now, basically sitting at the 200-day moving average, at least during the intraday, and you can see that the last time we fell below that was on February 9th.
Go on about the fundamentals, because that has been the story that the bulls tell is that, oh yeah, whatever happens at the White House, whatever happens with the Fed, you just can't deny rock solid earnings and a global synchronized recovery. And ultimately, everything else is a distraction besides the fundamentals. But what you're saying is that maybe the fundamental story getting slightly less compelling.
Yeah, and especially if we are going to go up against China and have some sort of, whether it's a trade war, ultimately, I believe our ultimate goal is to sit down at the table with China and negotiate something about intellectual property rights. I think that's the real end game here, is really starting to try and protect intellectual property rights. And that's what I think the market has missed. So this trade war is just the start of it. And Trump is very serious about this. I think when he looks at things like North Korea, he says, hey, 20 years ago, had we done something when we could have, we would not have a nuclearized North Korea. So I think he's a little bit more adamant about resolving intellectual property rights in China than the market's been giving him credit, and that is why the sell-off is real and probably continues.
Okay, but in the meantime, investors are taking everything he says literally as if we're going to enter a trade war tomorrow rather than seeing the end game for what it is. Part of that is because he's been unpredictable and he likes to keep that hanging over people's heads.
Yes, he's been unpredictable, and China tends to be unpredictable as well. So we don't know what their end game is or how they are going to respond to this. So I think right now there's a lot of nervousness. And listen, we were at all-time highs, so it's not like we're selling off from very low levels. There was a lot of room and maybe potentially some froth in the market.